Hello there. Welcome back to Accounting Space. In this video, we want to look at the preparation of the cash flow statement. So we're going to look at question 2 of the question. It's got 30 marks. It requires you to spend on average 27 minutes on that question. So I'm looking at our question. Our question to Mabudin Limited. The financial year issued on the first day of the financial year is the main purpose of the cash flow statement. So obviously, our question needs us to write down in terms of importances of a cash flow statement. What purpose do we prepare the cash flow statement? So basically, we are saying, remember, the cash flow statement it's a statement that shows an actual movement of cash in and out of the business, and it also shows the cash balances at the beginning and the end of the period. So basically, in terms of the main purpose that we can try to put down, we can say the cash flow statement shows management of cash flow. Basically, it shows the management of cash flow, or you can try to explain it from the point of view that it shows the actual cash balances, that is bank balances at the beginning and end of the period. So on the other section, we are just going to present 1 point according to our question. Remember, our question is got 2 marks. So we are going to say the main purpose is to show management of cash. So basically, that's the purpose that we can try to bring, that it shows the management of cash. So basically, this is what we have on 2.1. Then we go to our next question, and then take one at 21 marks. So the information that we have given information A, whereby it reads that the following information was extracted from the income statement for the year ended at 31 October 2022. So you're given the information for information A. Then if you go to B, you're given again information extracted from the balance sheet on 31 October. So given 2021, the column for 2021, then we've got also a column for 2022. So moving on, we're also given information C, where we're given fixed or tangible asset notes. Then I believe that we've got additional information in respect of fixed assets that you need to go through before you start to answer even. So going back to our question, you'd see that our question requires us to complete the cash flow statement. So going to our answer section, you'd see that this is our cash flow. Our cash flow statement is presented in the answer book, as we are seeing that we have got other entries that are pre-entered. So if you check there, you'll see that we've got cash generated from operations are being pre-entered. We also have interest paid being pre-entered. So we are going to start by calculating the figure for taxation paid. So basically, on the calculation of the figure for taxation paid, we are going to use the information that we are given in the question. So going back to our question, if you go down our question, you'd see that the figures that we are going to use to calculate the figure for taxation paid, we are given information D and E, whereby you are given SARS income tax, whereby you're given other trade and other receivables. We're given a balance that is on 31 October 2022, which is at the end of the period. So we can read, and this column represents at the beginning of the period. So basically, that's what ends. It's at the end. We take note of that. So for us to be able to calculate it, we can just try to understand that as we present in the form of a T account, whereby we'll be having the SARS. So, given the information that we have, we see that we are given traded in the form of traded other receivables, and then under also traded other payables. So we should take note that if the balance is under trade receivables, if it's under trade receivables at the beginning, it should be receivables at the end. It should appear as a CD on the credit side. Both at the beginning, it will be on the credit side. Then trade payables at the end will be on the debit side, and also should be appear on the credit side. Taxation for the period. Taxation for the period, we should see it on the credit side. To be entered in the cash flow statement, should be on the debit side, and it will be as the balancing figure. So basically, this is exactly how we are going to enter it as we prepare. So we are going to say, we present it again in the form of that T account. if you choose to calculate it from this point of view. So we are saying now, according to information given, we are having at the beginning, we are having it under traded other payables. We have 27,500 under traded other payables at the beginning, and we are seeing that traded payables at the beginning is on the credit side, and we are having an amount of 27,500. We are saying 27,500. And then if you look at the other balance that we are given it is the balance at the end is other traded other receivables, 22,500. Trade receivables at the end, you see that it's on the credit side again, and it's 20. Then we look for taxation for the period from the information given. I'll try to see if we have it. So you go other information that you're given. You see that taxation for the period you're given each year, income tax 375,000. So we are saying it should be also on the credit. So we put it on the credit again. 375,000. So the figure that we are looking for, this is going to be the balancing figure. So basically to get this one, now we are saying this one plus this one plus this one, 27,500. Remember, this is 37. So this is what we have. Then by so doing now, that's our degree, and they're going to give us the figure for bank, which should be in the cash flow statement. So in our answer section for taxation, and then we add 32,500, and then we add 378. We see that the figure that we are supposed to get should be 425,000. So it means here we have put our answer is 425,000. So basically, that's what we have. Then we now need the figure for dividends paid. So dividends paid, we are simply going to use the formula, the simple formula that you can use for dividends paid. Dividends paid, we are saying it is equal to opening balance for shareholders for dividends. So we can just use this formula, whereby we're going to say opening balance for shareholders for dividends. We have here, we see that this is the column for opening, so we've got 385,000. So we're saying 385,000. And then we add the income dividends. We see how can we calculate the income dividends. We are given here that the dividends in brackets interim and final for the financial year ended 31 October 2022 amounted to 825,000. So basically, to the interim plus final, we are saying we are using the figures for the current day. So basically, we are saying if we say the final is 450, which is at the end. That is the final dividend. So we say 450,000 plus the interim. Remember, this is the final. So if you add the interim, you get 825,000, of which the interim is not given. So you're going to say our interim, and then we add the final that we are given is 450,000. We get the total for dividend that we are given is 825,000. So to find our interim, just make it the sum of the formula whereby you're going to say interim 825,000, then plus 45,000 plus 400, so plus 450,000. You take it the other side, it becomes negative, so it becomes minus 450,000. So we calculate it like that. You see that the answer. So this is the interim. So this is the one that you are supposed to add here to 385,000. You can see 375,000. So this is the calculation that you are going to summarize in the answer section, whereby we are going to say plus 375,000. And then the answer that we are supposed to get is 700 cash flow. In the cash flow statement, we are supposed to show the movements of cash. If it's an outflow, we are supposed to show it by putting we are shown by putting it in brackets, and then when it is an outflow, we'll show it again in brackets. So basically, this is how we can cash flow from operating activities by saying 1,980,500 minus 425,000 minus 760,000. And then the answer that you are going to get is 625,000. So you can see this is cash flow from operating activities. And from there, we can now be able to move to cash flow from investing activities, whereby we're going to start the fixed assets purchased. So obviously we've got the fixed asset note that we can refer, and we look for fixed asset purchase, but you see that it's in the row, in the row addition at cost. And you see that the addition that we only have is other equipment, which is 48,000. So we only have one addition of 48,000. So we come here. So you see 48. Then also we have to move to proceeds from. So looking at proceeds from sale of fixed assets, we are also going to refer to our fixed asset notes, whereby we are saying we are given additional information in respect of fixed assets, whereby it reads a vehicle was sold at its carrying value on the last day of the financial year. Depreciation is written off on vehicles at 20% per annum on the diminishing balance method. So we are concerned that we have got a vehicle which was sold at its carrying value. So very important, it was sold at its carrying value. It was sold at cost in the land and buildings. Then we see that land and buildings at the beginning, there was a cost of 3 million, but at the end of the period, we have got cost of 2,500,000. So basically to find the one that was sold, we see that there's a reduction, which means there's something that was disposed. So you're going to say 3 million minus 2,500,000. And then we do that 3 million minus 2 million, get 500,000. So here in for landed buildings, and then we can now be able to find for the vehicle that was sold at carrying value. So we go to the column for vehicles. We have got this one. So we are going to use the T account as carrying value. Remember, we can use a T account whereby you say we say balance at the beginning, debt side, and then it carrying value again, which is book value. Any additions, and then we have depreciation for credit side, and then we have got on the credit side. So we can just try to calculate it using this format, whereby now we are saying according to information given, we can now be able to come up with a solution using that T account, whereby we are saying for vehicles carrying value at the beginning, we are aiming at 660,000. So we are saying it will be on the debit side. So 660,000 on the debit side. So we are saying 660,000. Then we have carrying value at the end on the credit side. So we have 446,000 on the credit side. And then all the costs. See that other vehicles, you don't have any additions, so you leave it blank. But if you check the depreciation for the year, depreciation for the year, we are giving it is 132,000, so it should be on the credit side. And then from there, we can on the credit side. But according to our question, we see that we have it calculated as pre-entered as disposal at credit value is 82,000. So we are just going to put that 82,000. So if you calculate there, you are also supposed to get the same value of 82,000. So here you come in, you're going to just add 82,000. So in there, you can see that the answer that you're supposed to get is 582,000. So on purchase of fixed assets, we are seeing that it's 40,000 in whatever you're purchasing. We are selling fixed assets. It's a positive. We are supposed to show it as a positive figure. So the cash flow from investing activities, we're going to say 582,000 minus 48,000. The figure that you are supposed to get is going to be 534,000. So we have 534,000. The pictures maybe. So we are saying 500 and 34,000. Then from there, we can now move on to cash flow from financing activities. So from financing activities, we have got proceeds from the sale of shares. So let's try to see according to information given on the sale of shares. We are told that on 1 November 2021, 50,000 holder shares were issued at 6 rand each. So if they were issued at 6 rand each, so we are going to multiply. Let's just try to see. We're going to say 50,000, and then we multiply by 6 rand, and then you're going to get 300,000. So basically, that's what we have. If you see, here we are saying it's 6 shares that were issued, and then you get 300,000. So here, and it's a positive because these are proceeds that we are receiving. Then you look at change in loan. If you go there, you see that our loan, according to information given, our loan, it was in 2021, it was 1,375,000, and then it increased to 2 million. So this was an increase, which means it's an inflow. It's an inflow, which we are going to show as a positive by saying 2 million minus 1,375,000. So we come in, we're going to say 2 million minus 1,375,000. So obviously we are saying this we should show it as a positive. The cash flow from financing activities, we're going to say 625,000 plus 300,000. We have variability. So from there, we go to net change in cash and cash equivalents, whereby we are going to say 625,000. 625,000, and then we add 534,000, and then we add 925,000, and then we get net change in cash and cash equivalents, which is going to be 2,084,000. The dedication cash equivalents at the beginning, we can get it in the question. Cash equivalent at the beginning is 2021, we've got 207,500. So we come here, I will say 207,500. And what is the important asset or liability? You see that is so other current assets, so it should be positive. So we come here. So at the end now, we are just going to add 2,084,000 cash and net cash and cash equivalent at the beginning. Then you get cash and the cash equivalent at the end. So you add 2 million, then you get the final balance, which is supposed to be 2,291,500. So basically, this is what we have according to the preparation of the cash flow statements. So thank you for listening, and hopefully the video was helpful. And also, we should take note that final balance of cash and cash equivalents that were given in the list of balances. Remember, come here, this is going to be the final balance, 2,481,500, which is the same as the one that we got here, 2,291,500. So it means we have prepared our cash flow statement correctly. So thank you for listening, and hopefully the video was helpful. And let's take notes, please. Let's subscribe and share to our channel, and let's share the link. Let's meet again in the next video. As for this video, I'm signing out.